A big war is coming, and it's going to impact crypto and stock markets. Huge impacts, right? I just have to show you guys this chart to see how much it can impact price of Bitcoin and price of the SP 500, right? That's what this episode is going to be about. It's a special episode because situation has changed. We're going to be looking at $100 plus oil in the coming, $100 plus oil in the coming few months. And some people who still don't realize what that means yet, well, you just have to look at what did that do to the price of Bitcoin and how the stock market reacted to it in the last few days. Like this drop, we got down to like about 102, right, on Friday because of all the fear and war news. So basically, first, let's have a look at how SP 500 reacted. SP 500 reacted with this topping tail, right? That's not good. That's not good at all because, first of all, I've been expecting a pullback and it didn't come at the place where I thought it was going to happen because this gap, this jump up, was because China and US got down to a deal very quickly. In my view, I said Trump caved, right? I've been saying that all along, saying Trump's going to be Barney Rumble caveman. And if you think US won in that negotiation, that's fine as well. But whatever it is, it boosted the markets and we kept on going. And now this is the first negative looking weekly bar we've seen on the SP 500. By the way, why am I analyzing this? Because if you look at the Bitcoin chart, it looks pretty much like this. If you still don't believe by now that Bitcoin is heavily correlated to SP 500, which is basically US economy, then I don't know what to tell you. So basically, it's like this. We've got a topping tail, and it's looking like we could be pulling back and chopping around here next few days. First, let's have a look at how oil prices affect Bitcoin. This should be pretty obvious by now by just looking at this. Look at how like this was the oil spike up, right, to $120. $120 and double top $115. This was the spike up in late 2020. This was early 2022. And of course, what happened to Bitcoin? What happened to Bitcoin? Everyone was expecting 100K Bitcoin, right? I was calling for 20K, got the initial timing wrong, but got the second call right. And then boom, it came all the way down, right, to 15K. And then what happens to oil prices? Oil price goes sideways, then Bitcoin rallies. And then do you remember how Bitcoin hit 73K and dipped to 49K, right? That was when oil was going sideways around in the 70s. And then oil crashes to like $58, $58, $59, goes below 60. When it goes to that sort of area, it's kind of like saying, you know, that you usually get oil price that low in a recession. When oil prices starts doing that, Bitcoin goes boom, 108, 109, 112K, right? Now, what happens if oil prices does this? So just to be clear, what happens if oil prices, there are two scenarios. It can do this or it can go sideways and then do this. What happens then? Now, before we answer those questions, first let's answer the question of which crypto exchange does Pablo use? Well, Pablo uses this exchange that's non-KYC. That means you don't need to show any ID. That means the exchange can't even see who you are. Of course, then Americans can use it. And 20% bonus just by depositing, right? So for example, deposit $500 get 100 USDT for your futures trading. Deposit 1,000 USDT and get 200 USDT for free just for futures trading. And all these great prizes just by trading volume. MacBook Pro, iPhone, Apple Watch, right? Even if you're in the top 20, still getting prizes. But for a limited time only, this is only until 11th of July. Okay, so if you're watching on YouTube right now, then the link is in the description below. But if you're watching on any other platform, then just click on my profile page and it takes you there to my Stan link. That's my link tree, and it should be the first deal that pops up because this is a great deal. Okay, let's get back to the markets. And remember, folks, this is only on the Pablo link. So with Bitcoin, so in the short term, as I've been saying, I don't see a fast crash into the mid-90s. I do think mid-90s is possible, Even low 90s is possible, but I don't see a fast crash because we had a lot of greens. And indeed, over the last 48 hours between my last video and now, we've seen a small bounce in Bitcoin. Now, the key here is obviously, let me show you more examples of what oil prices can do to Bitcoin prices. So, for example, this was different. This is the only period that was different because this was when the Fed said unlimited. Remember March? Fed said unlimited support for the U.S. economy, unlimited money printing. Boom, Bitcoin took off, oil prices took off, and then basically, if we look at this part, so here was again we see this was 2018 bull run. Oil price went from, again, see this key level, $57, started rising to $73, and Bitcoin had a bad reaction, right? And then oil prices crashed because this was COVID. Fed said unlimited money printing, right? Oil price stays kind of low. This is around $40 oil. Oil actually went to $17, but on spot, or went negative on some other exchanges. And the low oil price, this was all below 80, below 90, allowed Bitcoin to rally, right? When oil got up to around 73 again, right, Bitcoin pulled back, and then, as I showed you guys, oil double top, Bitcoin crashes. You can see oil rises here again, right? Bitcoin dumps again. This low oil and Bitcoin rallies. This is a very well established phenomenon because the thing is, whenever you have a $10 increase in oil price, then inflation in the US goes up by 0.5%. So $20 increase, then inflation goes up by 1%. So right now we're at 2.4%, and then inflation goes to 3.4%. No way that the Federal Reserve is gonna do any easing. So have a look at this. This again, red is oil price. This is just looking like looking at the Bitcoin chart. Oil price spikes, then basically stocks tank. This was a 20% tank. Technically, a small bear market because it went down 20%. Oil prices tank down, goes down. SP 500 goes up. Stock market goes up. This was different. They went up together because this was when oil price was at $16, right? It's like, this was the COVID crash, and then they rose up together. So, for example, we see that this period when oil from above $100 crashed down to $30, that created the chance for stock market to have this major rally, right? Major rally. And look at this. What caused the 2008 GFC financial crisis? What caused the GFC? Well, what caused it was this. Oil went from $52 to $147. 2007, 2008, I'd have to find out what was the reason oil was rallying around then, and look at stocks, right? Basically, that's when the Fed just had to hike interest rates. All the people in those mortgages, those subprime mortgages just couldn't afford it anymore. Stocks couldn't hold on. Oil spikes, stocks crash, right? And then they all crash together. Even the 2008, 2009 crash was partly, you could say oil spike caused the Fed to hike rates because inflation comes up. So having established oil price is so important to the US economy and all, what we want is basically for oil price to, I don't think we can avoid an oil price spike. It's just that will oil go sideways and swing up and down and give us like 6 months, give us some runway for the next few months for a final blow off top. I see one more big leg, even 2 big legs coming up in Bitcoin, like what they call wave 3 and wave 5. If you're into Elliott wave theory in Bitcoin. And if oil goes up like this next 2 months, then chances are Bitcoin we'll just have a small pop-up, fake out to around 118, 120, and then we go down. Bear market. But if oil can do this slow sort of climb, give us a few months, and then by August, September, and then come up in this, in what is this? Yeah, September, October, November, and then climb up. Then we have a blow off top. It gives us, essentially we need about 3 months to 4 months for Bitcoin to have a blow off top. My blow off top for Bitcoin is around September to November. So we need 3 or 4 months for the war not to escalate much further, and then for Bitcoin to have that big blow off top. I think altcoins will make a big run, finally the real altcoin season, and then everything crashes. Everything crashes. Now, the reason why is because something I've been saying in my Discord all along. This is not, I'm going off historical facts. So basically, the nightmare scenario is Strait of Hormuz, that if they close, then oil basically spikes to $115, $125, right? Somewhere around there, and then comes down. Now basically they said, what if Iran, oil producing capacity has been shut off? Because Iran is not huge. Iran is only like 2%, 1.5% of the world oil production. If 50% or 100% reduction in Iran itself, oil price can still stay around $65, which is lower than where we are now. Or if Iran completely shuts down, oil would still stay around $75, which is where we are right now on the oil chart. But a closing off the Hormus Strait would mean an oil spike, and this would be the nightmare scenario. And look at this. They projected this for July, August. That would crash Bitcoin. So the scenario that I hope that would happen is if Bitcoin, if this doesn't happen until, say, September, late August, September, and just I'm sure plenty of people who are watching this video don't know what the Hormus Strait is, and people in my Discord, I've been talking a lot about this, and come on, and now, but it's different when you show it actually on a map. The reason why this is a big deal is because this is Iran. Iran produces a lot of oil, but it's only like 1.5 to 2% of the total world supply. But who produces a lot of oil around here? Saudi Arabia, Iraq, Kuwait, I think parts of UAE, yeah, like I think Qatar, Bahrain definitely do. UAE, so not Dubai, but Abu Dhabi. Oman doesn't. Yemen doesn't. So you still have parts of Syria. So but a lot of the 20% of the world's oil has to come through this channel. Even though 2% is from Iran, so if Iran gets destroyed, its oil production facilities get destroyed, Iran doesn't. It doesn't impact world oil prices that much. But what Iran can do is it can chokehold this area, so no ships from Abu Dhabi, from Qatar, Bahrain, Saudi Arabia can come through here. That would choke off 20% of the world's oil supply. Of course, then you say, well, what if they go this route? If they go this route, it takes longer. And the Yemen Houthis are bombing this area. So that's also problematic as well. This could be a bad oil squeeze. And I just, this is a real crisis for the stock market and for Bitcoin. I just hope we don't, this, of course, Iran knows this is bad. This is going to hurt everybody, including the United States. The US produces its own oil, but the problem is the fracking, the shale oil goes, it's like they have the sweet and light oil and the heavy and sour. US, unfortunately, the shale oil are only for export. US still needs to import oil because it's US oil refineries are only set up for the kind of oil it imports. So it's going to impact China. It's going to impact Japan. And South Korea. That's like half of the world's manufacturing. Half the world's manufacturing takes oil. 20% of the world's oil through here, through Malacca Strait, and goes to China, South Korea, Japan. And also you could argue that this then goes around the Cape of Good Hope, and then, well, no, actually, then some oil goes through here into Europe. Europe is less affected, but if China, South Korea, and Japan are bidding high prices for oil, then oil prices become high in Europe as well, because then why don't you just go to Asia and sell oil to Asia? So basically, what are the plays in some of the stocks that I'm looking for this? So for example, I am looking at the top solar ETF in the world, solar fund ETF in the world. And believe it or not, that is actually a small solar fund in China, because the top solar funds in the world are basically, the top solar companies in the world are basically in China. I'll talk about the Americans next, the American solar companies. It's on the Hong Kong exchange. They call it 3134. They use numbers. I mean, if you want to use that name, that's okay as well. And you can see it's crashed like from almost $13 down to $3 because there's so much competition. That's like what happens with anything in China, with EVs, with anything. There's so much competition. There's so many companies. But I do think we're inside a falling wedge right now, and we could possibly break out. I've been dollar cost averaging in a little bit around here, and just did more in the last couple of days. And one more good thing about them is this. Basically, there's a new energy source called helium, and it's still very early. This is like getting into solar companies like 20 years ago, right? But for example, Longyi is like the number one, number two solar company inside China, and they're developing hydrogen. They're not the only one. A number of them are developing hydrogen as well, because they're all about new energy sources. So within this ETF, which is so underlooked right now, everyone thinks it's a dog. Like China is in a bull market, start of a bull market right now, and even this index is still going down. So even in China and Hong Kong, people are not buying this. But that's where the opportunity is, in my opinion. Not financial advice. Nothing I say here is financial advice. It's just what I'm doing. And like 2 or 3 of the top companies within this index would be researching hydrogen as well. So then it's a 2-for-1 offer. A 2-for-1 offer where it's the top 10 solar companies in the world by sales, and it's also like the top, I would say 3 of the world's top 5 hydrogen companies are probably in here as well. The other top 2 are probably inside Japan. The one, if you're American, if you don't want to buy Chinese stocks, if you're a patriot, here's a company, First Solar, that's inside US. It's doing quite well with the share price because of the Trump and and Biden both installed sanctions against China. Trump's removed some of those sanctions, but removed the Biden subsidies, but also there's still tariffs on China solar. So even though the Chinese ones are cheaper, ahead in technology, cheaper and better in technology, but they just can't get into the United States. So it has all of the US to itself. So that's why it ran from what? Like $30 to $300. Yeah, just before Trump came in. So this is a 10x run for the solar company. What happens is basically First Solar has some new technology that China doesn't have, but it's still in development phase. Basically, they're trying to create these building materials. Like you can use it as a window. It's see-through, it's clear, it's transparent. You put it on as a window on a building, but it actually takes solar energy and transfers into electricity. Right now, the solar panels are like these dark panels, and you can't see through it. You can't use it as a window. They're trying to develop this technology where you can use it see-through as a window. It's going to be transparent, see-through. So that's where First Solar could work. They have that technology, and China's trying to catch up in that technology. One more I must say is Oxy. This is the oil company. Oil company is going to do really well. This oil company is something that Warren Buffett has been buying all along. He's been buying it. And it's had this pop to $46, but look at this. This $37 is only slightly off. $38 is long-term support. Look at this. Oil, it's only came down here a few times since 2008, 2005, 2019, COVID crash. COVID crash was the only time it went below here in the last 20 years. So this is bargain basement. I'm sure Warren Buffett would have been buying. And if oil prices pop, then this should do quite well. Could easily go to something like 90, 100. And yet in the meantime, it's also giving you 2.5%, 2.3% dividends, right? That's quite good. However, if a recession comes, then we could still have a crash low. This was what happened during COVID. That would be, well, what an opportunity to pick up a company like this. Warren Buffett keeps on buying it. I'm sure next financial report comes out, we're going to see Warren Buffett buying here. Now let's get to some of the big ones like gold and silver. Now, I'll just quickly, gold obviously going to do well because major war in the Middle East. Look at this, highest historically close, weekly close, and you know, I see new highs coming for gold. Like, we're lucky if we even get a pullback to like 32, 3100. Be 10% chance if we get some sort of pullback like this, bull flag, boom, off it goes again. Silver has a special case because now silver over the next 6 months, I see it as doing well unless we get a massive recession, which cannot be ruled out because of the spike in oil prices. 20% of the world's oil supply comes from solar panels. 20% of the world's silver demand comes from solar panels. So when oil prices spike, it's basically in the next 6 months, which I think is going to happen, more than 70% chance it's going to happen. Then what's going to happen is anything to do with energy will do well. So that means oil companies will do well. We've talked about Aussie because Warren Buffett buys it. That means silver is going to, solar panels, what do they call photovoltaic solar companies may not go into a bull market, but it probably bottoms. That's the moment when we find it bottoms and starts turning up. And then silver, gold do well because there's war and conflict. Silver does well because there's lots of demand for solar, and solar uses silver because high conductivity. So silver will do well. Now platinum I really like, but however, platinum may not do so well because there are two groups of demand for platinum. One is because the precious metal, if gold goes up, then platinum tends to go up with it. So if gold goes up a lot, then platinum will go up. But the other problem is platinum's main industrial use right now is in the catalytic converters of cars. And I'm not talking about EV cars. I'm talking about not EVs, but ICE cars, internal combustion engines. So diesel fuel that uses petrol. If there's an oil spike, then less people buy oil cars, less production of oil cars, people switch to EVs, and then lesser industrial demand for platinum. But there will still be a lot of demand for platinum for on the investment precious metal side. So for platinum, this is both good and bad. For silver, this is good and good. For gold, this is good and good. Okay, thank you guys for tuning in. This has been a massive episode. I might, if you guys are interested in how this war will affect investments, could be a major pivot coming up for everything. Not good for US bonds, I don't think, in the longer term. US is going in, so it looks like US could be getting involved in this war, and that means basically US bonds, US prints a lot of money, may not be good for US bonds. If you guys are interested in another episode on how this massive event, this Middle Eastern war, is going to impact the world, let me know. I'll do another episode. Catch you. Bye-bye.